Are you constantly wondering where to invest your hard-earned money? Do the complexities of the stock market make you feel overwhelmed and uncertain? You're not alone. Many people struggle with the fear of making the wrong investment decisions and losing their savings. But what if there was a simple, reliable strategy endorsed by one of the greatest investors of all time? In this video, we'll explore why Warren Buffett, the Oracle of Omaha, advises most people to invest in the S&P 500 index. By the end of this video, you'll understand the power of this approach and how it can help you build wealth over time. So, stay tuned to discover why the S&P 500 might be the perfect investment for you. Warren Buffett, the Oracle of Omaha. Warren Buffett is widely regarded as one of the most successful investors in history. As the chairman and CEO of Berkshire Hathaway, Buffett has amassed a fortune through his astute investment choices and profound understanding of the market. Despite his extraordinary success in picking individual stocks, Buffett consistently advocates for a more straightforward approach for the average investor, investing in the S&P 500 index. Why Warren Buffett recommends the S&P 500 index? Simplicity and diversification. One of the main reasons Buffett recommends the S&P 500 index is its simplicity and diversification. The S&P 500 index comprises 500 of the largest publicly traded companies in the United States, representing a broad cross-section of the economy. This built-in diversification helps spread risk across various sectors, reducing the impact of poor performance by any single company. By periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. Consistent long-term growth. The S&P 500 has a long history of delivering consistent long-term growth. Over the past several decades, it has provided an average annual return of around 10%. While there are fluctuations in the short term, the index has demonstrated resilience and a strong upward trend over time. This makes it an attractive option for investors looking to grow their wealth steadily. For most people, the best thing to do is to own the S&P 500 index fund. Low costs and fees. Another significant advantage of investing in the S&P 500 index is the low cost associated with index funds. Unlike actively managed funds that require higher fees to pay for professional management, index funds have minimal fees because they simply track the performance of the index. These lower costs mean more of your money stays invested and can compound over time. How to invest in the S&P 500 index? Choose the right index fund. To invest in the S&P 500, you need to select a suitable index fund or exchange-traded fund, ETF. Some of the most popular options include the Vanguard 500 Index Fund, VFINX, and the SPDR S&P 500 ETF, SPY. These funds aim to replicate the performance of the S&P 500 index and offer low expense ratios. Set up regular contributions. One of the best ways to invest in the S&P 500 is through regular automatic contributions. This strategy, known as dollar cost averaging, involves investing a fixed amount of money at regular intervals, regardless of the market's performance. This approach reduces the impact of market volatility and ensures you are consistently investing over time. Stay the course. Investing in the S&P 500 is a long-term strategy. It's essential to stay the course and avoid the temptation to react to short-term market fluctuations. Buffett emphasizes the importance of patience and discipline in investing. By maintaining your investments through market ups and downs, you can take full advantage of the compounding growth over time. The power of compounding. Compounding is a key factor in building wealth through the S&P 500 index. When you reinvest dividends and allow your investments to grow over time, you earn returns on your initial investment and on the returns themselves. This exponential growth can significantly increase your wealth over the long term. Example: the magic of compounding. Imagine you invest $10,000 in an S&P 500 index fund with an average annual return of 10%. After 20 years, your investment would grow to approximately $67,275, thanks to the power of compounding. This growth is achieved without the need for active management or frequent trading, demonstrating the effectiveness of a passive investment strategy. Advantages of S&P 500 investing. Broad market exposure. Investing in the S&P 500 gives you exposure to a wide range of industries, including technology, healthcare, finance, consumer goods, and more. This broad market exposure helps mitigate risks associated with investing in a single sector or company. Proven track record. The S&P 500 has a proven track record of delivering solid returns over the long term. While past performance is not a guarantee of future results, the historical data provides confidence in the index's ability to generate wealth over time. Reduced emotional decision-making. By investing in an index fund, you can remove much of the emotional decision-making that often leads to poor investment choices. The passive nature of index investing means you don't have to worry about picking individual stocks or timing the market, which can be stressful and challenging. Addressing common concerns. Market volatility. Some investors may be concerned about market volatility and the potential for losses in the short term. While it's true that the stock market can be volatile, the S&P 500 has historically rebounded from downturns and continued its upward trajectory. By staying invested and focusing on the long term, you can ride out the market's fluctuations. Missing out on individual stock gains. Another concern is missing out on the potential gains from individual stocks that outperform the market. While it's possible to achieve higher returns with individual stocks, it also comes with higher risk. The S&P 500 offers a balanced approach, providing exposure to many high-performing companies while reducing the risk of any single stock underperforming. Quotes from Warren Buffett. To further inspire and guide you, here are a few timeless quotes from Warren Buffett. I recommend the S&P 500 Index Fund. I've never recommended Berkshire to anybody because I don't want people to buy it because they think I'm tipping them into something. On my death, there will be a fund for my then widow, and 90% will go into an S&P 500 Index Fund. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline. Never think about stocks anymore. You would do better than 90% of the people who start investing at the same time. Conclusion. Warren Buffett's advice to invest in the S&P 500 Index offers a simple, effective, and low-cost strategy for building long-term wealth. By embracing this approach, you can benefit from the consistent growth of the market, diversify your investments, and reduce the risks associated with picking individual stocks. Remember to stay disciplined, make regular contributions, and focus on the long-term potential of your investments. As Buffett wisely advises, by periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. So, take this advice to heart and consider the S&P 500 Index as a cornerstone of your investment strategy. If you found this video helpful, please like and subscribe for more insights on investing. Stay tuned for more tips and strategies to help you achieve your financial goals. And if you're eager to explore more about investing, make sure to browse through our other videos on this channel. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.